Hey everybody, what's going on? Welcome back to the channel. Thank you guys for being here. I'm happy to be here to do another video for you guys. Today we're going to go through the watch list for Tuesday, October 11th. I put these videos out for you guys, these watch lists for you guys for free every single day. So make sure you're subscribing down below and clicking the bell. That's the important part. That will send you the notifications for when I send out these videos every single day for free. I've got 300 plus videos for you guys to learn to trade this strategy, to become more profitable, more consistent. That's why this channel is here. I want to make as many profitable traders as I can. And I promise you guys, if you give this stuff, study this stuff, go over this stuff, be adamant about what you're looking at and what you're doing for 6 months to a year. I know that sounds like a long time, but trust me, do it consistently and this stuff will become like reading a book to you. And by the end of that 6 months or that year, I have no doubts that you will be on the right end of your trading. I want to go through a couple things before we get started. The platform that you guys see here, this is TradingView. So if you're looking for a platform to use to chart your trades, this is how I do mine. There's a link in the description below for a free 30-day trial to TradingView's subscription-based services. So go into the description, click that TradingView link, get your free 30-day subscription, and then if you decide that you want to use their paid subscriptions, you get up to $30 off of those subscriptions. But you need to start by going down below and clicking on that link. If you're on Twitter, you can find me there as well. I also have a Discord that is in a link in the description below as well. Griswold Trading, and everything that I offer you guys, free or fee-based, can be found in that room. Whether it's the Griswold Gold membership that has, you know, one-on-ones with myself, live trading bots, the indicator that I've created, the all-in-one stop-shop strat indicator, ad-free watch list videos, the top fives, all kinds of other stuff. But there's a ton of free rooms in there as well for you guys to go check out. There's also a 1-hour strat course that I've created that's part of that membership. Or you can buy a bunch of that stuff separately, but all of that stuff can be found in the Discord. Okay? I think we can get started on this list. I want to go through the top 3 plays that I gave out for Monday, and just so you guys can see how they would have played out for you. Okay, so the first one I had on the list was Ford. So Ford, we had this 2 down that finished green, and we were looking for it to trend up. It obviously gapped down at open. So again, that's not something that you have to play. Okay, but if you want to play the gaps, you go to the 15-minute chart. Okay, and you go to the open. And then you had this inside bar here. This was the first 15-minute bar. So the way it is, and I have a bunch of gap videos. I think there's 4 or 5 of them that you guys can go watch. There's a playlist in my YouTube channel of gap videos. So you wait for this first 15-minute bar to close. You take the break of the high or the break of the low. So the next bar was an inside bar. Now you take the break of the high or the break of the low of that inside bar. Then you had another inside bar. So again, you take the break of the high or you take the break of the low. So this one broke to the downside. And again, this wasn't the easiest of trades to make. So that was your trigger. And that was your first target. And this is what I always tell you guys. When you don't have a lot of room there, it hits those targets and it reverses. So there wasn't much opportunity, especially at 2 pennies, for you guys to make a lot of money off of Ford. Now, if it gapped like it did, I'm probably moving on to the next trade, especially when not everything gapped on the day. Okay, so we go to the next one. The next one I gave you was Macy's, ticker symbol M. So Macy's, again, this was one that gapped up, and it has an outside bar, and we opened up above our trigger line. So once it opens above the trigger line, or below our trigger line for puts, that becomes a gap setup or a gap play. Okay, so again, you drop down to the 15, and this was the opening bar. So we opened and came down, and then if you're playing that 15-minute opening range breakout, that is your new trigger, and then you just set targets. Okay, your targets become, and I'm just going to change these green. Your targets become there, and there, and There's another one there we can mark out, and there. So we had a winning trade here on Macy's. So if you would have taken that 15-minute orb off of the gap, you would have had a good opportunity to make some money here, okay? And the last one I want to go through is Peloton. This was the third of the top 3 that I gave, and we'll just go to the 5 to show you how it played out. So if we hop back to the 5-minute chart, and this was the first bar of the day, okay? And I went through this. I had a one-on-one with someone today, and I went through this setup because she actually took this play, and she made a bunch of money off it. So let me go through it with you. So we are looking when this first bar doesn't quite break trigger there, but on the next bar we break the trigger. So there's 2 spots. If you just want to say, you know what, I'm not comfortable, it didn't run up enough, I'm taking my stop loss at the trigger as it comes back through, that's fine, okay? If you want to use this bar, that first 5-minute bar, as a stop loss, that's probably what you should do to try and stay in this trade. And then as this bar opens up and continues up, this becomes, bottom of a bar, becomes our stop loss, okay? Then as we go to the next candle, this bar becomes our stop loss, okay? And then we go to the next candle. This bar becomes our stop loss, or you use this target as your stop loss. Okay, so as this candle comes up and then reverses back through, you take money at your target and you're good to go. And that's exactly what she did. She took money at that target and she was out of the trade. Now, again, if you want to use the bottom of the candle as a stop loss, that's fine. And then when the next red candle closes, we come back through and you're out of the trade here instead of here. So it's a little less money, but still a really successful trade on Peloton. Okay, so that was the top 3. I wanted to run through those with you guys real quick. So if you would have skipped the first 2 because they gapped, Peloton you would have made a bunch of money on. Let's go to our actual setups. Actually, we're not quite there yet. So DraftKings was another one of our setups, and I just wanted to show you guys. DraftKings ran almost 14%. Now, if we're taking this at the trigger and jumping out real quick, not real quick, but if we're jumping out, this was that first bar that opened, and we went right through 1, 2 targets, okay? Next bar, we trim up above that target a bit, and then we come back down. So if you were still in, this probably would have been the spot I would have taken profit, or at this second target is where I would have taken profit. Now again, a lot of times, and I don't want to talk about this too much, but I use this 9 EMA. If I'm really deep into a trade, 50, 60%, sometimes I'll use this EMA, and I'll wait on the 5-minute chart for a candle to close above that 9 EMA. And it doesn't work all the time. It really worked on DraftKings today if you would have followed that, and you would have been out of this trade right here at about 9:25 or 2 hours into the day, and you would have had a really, really great day on DraftKings. But regardless, if you played DraftKings, you would have had a really great day regardless. Whether you sold down here or sold up here, it was a good day for you. And then the other 2 that I want to go through with you guys really quick, we talked about these, not at length on the video for Monday, but we did talk about them because we had these setups, these pivot machine gun setups, where we had these higher lows all the way up, and I said look for a reversal, and we got it. We didn't quite hit targets on Exxon, but that was a good trade on XOM, and then XOP had the same thing, and we hit some targets there, so another great trade on XOP. Now we get into our watch list for October 11th. Sorry, that was I just wanted to do a review, and maybe I'll do these. If you guys want to see that a little bit more on these videos, I'll do a couple reviews of some of the plays, and then we'll move on to the watch list. So let me know in the comment section below if that's what you guys would like to see moving forward. So AMC has a 2 down finish red, but we have this shooter candle. So a shooter candle is an actionable signal. It's a Momo shooter saying there's momentum to the downside. So we have full time frame continuity to the downside. We can look for puts at $6.27 on AMC. And in order to find targets, we have to go quite a ways back. And we're all the way down to there. And do I think we hit 596 tomorrow? It's possible, but I would be cautious of it. But that is your target. So 596 is the target on the $6.27 puts on AMC. We'll move to AMD. AMD had a 2 down that finished green. So we're going to look for calls on AMD at 58.79. First target has great magnitude at 64.03 on AMD. GME, 2 up red shooter candle. That's an actionable signal. Time frame continuity to the downside. We're going to look for puts at 24.75 and our first target at 24.42. And then you can mark out the next targets as you move down lower. There's the next one at 24.21. That is on GME. Keurig Dr. Pepper has a 2 down that finished green, so we're going to look for calls at 37.07. We're hovering around this broadening formation. If we zoom back out, you can see lower lows to lower lows. We came back below it, up, and now we're hovering around it again. So we'll look for KDP to trend up tomorrow with calls at 37.07, first targets at 37.20. Lift, inside bar. Okay, let me talk about inside bars for the newcomers. If you've been with me for a while, you know all about them. So inside bars, they're colored yellow because of the Griswold Strat indicator that I've created. And it also includes these candlestick numbers and the time frame continuity and a bunch of other things. Like I said, it's all these Strat indicators rolled into one to help you guys out. So when you see those yellow bars or the inside bar tabs, also part of that indicator, I want you guys to think of a spring becoming loaded, like a jack-in-the-box. You know, the little Christmas boxes where you dun, 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 and it explodes. It explodes usually up. I can't explode down unless you have the box flipped upside down. But that's what we're looking for, a spring that's getting tightened and coiled and then getting ready to release. And you can just, all we have to do is go back in time and look at the previous inside bar candles to see that the probabilities are quite high that this works out. So we opened, we triggered, we target. And I'm sure this hit more targets on the way down right there. So it hit a second target as well. But all we have to do, and I like going back to show you guys this stuff because our trades are based on probabilities. And so now these are 2 inside bars that went outside bar. But here's an inside bar and we had a nice run down. And here's an inside bar and a beautiful run up. And here's an inside bar with a run up and an inside bar with a run down. Okay, so I like going through these to show you guys inside bar down. That the probabilities of this happening are high, but it doesn't always work out. And all trades and all strategies are based off of probability. And that means that there's risk involved. And it's how we manage that risk that makes us a successful trader or an unsuccessful trader. And realistically with the strat, we're looking at these candlesticks, and the candlesticks are telling us a story. Just like this candlestick, this inside bar, this actionable signal says, if I trigger to the downside past this wick, then you can buy me. And if I hit these targets, then you can sell me. Now, as we go back to the start where we had this original inside bar here on lift, this is telling the same story. It's basically saying if I trend up, you can buy calls here at 13.01. If I trend down, you can buy puts at 12.36. Now, this one is an interesting story because we have this pink line. Okay, so if we go to the week, that pink line represents my weekly trigger to go 2 down off of this shooter candle on the weekly on lift. Now, we are already, this blue line, if we go to the month, we are already 2 down on the month on lift. Okay, so they're all 2-2 continuations on the month. We're looking for the same thing, 2-2 continuation on the week. And we go to the day, we're looking for a 2-2, 2-1-2 continuation on the week. But our first target on lift is the trigger on the weekly. So we can possibly jump into this and possibly hold it for a little bit longer than a day based on the fact that we've already triggered on the week. Now, probabilities tell us that if we trigger on the week, we should have some room down to, and let's go see where we have the room to. It's a long ways away, but it's basically telling us we have room to 1196. So if we go back to the day, that's essentially the target we're looking for on the week. So it has potential to move down that far. Now, if it does move down that far, that's the question. And do we get there? And that's part of the management of the trade. Okay, so if I'm looking at this trade, I'm the better trade is to the downside, but there's also probability that it trends back to the upside. But we're already 2 down on the month based on this blue line. We're looking to go 2 down on the week based on this pink line. And we're looking to go 2 down on the day based off of that yellow line. So that's how you would play lift. We move on to Nike. So Nike has another actionable signal here, but it is a red candle. So we have a hammer candle, which tells me that there's a probability that calls can take place here, and we may trend up. So we can look for calls at 87.78, and we can look for the first targets at 88.76. So good magnitude. It's a full dollar based off of this hammer candle. Is there a possibility that we go 2 down on Nike? There definitely is, but we're going to look for this thing to trend up. And if we do that, because this bar represents the daily and the weekly, if we trigger above that bar, the daily and the weekly will be green along with the monthly and the quarterly. So we'll watch Nike for tomorrow or on Tuesday and see how it plays out. Next up, we've got Procter Gamble. Same setup. It's a hammer candle, but this time we've got a 2 down that finished green. Okay, so I'm going to look for this to trend back up again. We are hovering around the bottom of this broadening formation, so calls at 124.25, and we can mark our first targets out at 126.58 on Procter & Gamble. Roblox, same thing, 2 down green. We're going to look for calls at 35.89, mark our first targets at the top of the preceding candle at 38.06. Roblox, I believe, does have a wide spread between the bid and the ask. So if you're buying market orders, this one might not be the best play for you guys. Starbucks, 2 down, finish green. We're going to look for calls at 87.57. First target, top of the candle. Next target, bottom of the candle. Why, do you ask? Well, if you're new, I'm going to explain it to you. There is no candle between the top of this wick and the bottom of this wick. There's a gap in here. So when we have that gap, the target becomes the bottom of the candle to fill that gap, and then we can move the next target up to the top of the candle. Next up is SE, 2 down, finish green, hammer candle. Great time frame continuity to the upside. Calls at 59.62, first target at 61.20. Space, 2 down green, hammer candle. These hammer candles are actionable signals. The inside bars are actionable signals, and these shooter candles that you see here are actionable signals, just like this hammer candle, shooter candle is actionable. This hammer candle is actionable. Okay, so calls at 4.95, first targets at 4.99. Only 4 cents, not great. I'd like to see a little bit more there, but that is the target for space. Target, 2 down, finish green. So we're going to look for calls at 153.88, and let's mark the targets out together. The first one goes to the top of the candle, and the next one goes where? If you said bottom of that candle, then you're correct, because just like we looked at on, I think it was Starbucks or SE, we have this gap to fill. So the target to fill the gap, that target to fill that gap is at the bottom of the preceding candle, if that made sense, or it makes sense. Tesla. So Tesla I've got on here for one reason. So we've been trending down with Tesla. We've got a 2 down that finished red today or on Monday, but we broke through that weekly trigger. That's what that pink line is. So we've gone 2 down on the week already on Tesla. This purple line is the quarterly. Okay, so we are close to breaking this inside bar off of Tesla, going 212 continuation to the downside, breaking that 216.17 mark on the quarterly. If we do that, we've got targets all the way down here at 216.17. Now, if we go to the weekly, because we've already broken that, that weekly target and the quarterly trigger are the same thing. So first targets on the weekly are the triggers for the quarterly. So it's a domino effect. Okay, do you see how that works? We go to the daily. We trigger the day to the downside. We trigger the week to the downside. Now if we hit targets on the week, we've triggered the quarterly. So if this happens, then that happens, and it is a complete domino effect, and that's what we look for to have, one of the things we look for to have successful trades. As we trigger on the lower time frames, we're looking for triggers on the higher time frames as we go along. Okay, so I had Tesla on there for that reason, because we have triggered on the weekly already, so we're going to look to go 2 down on the day. That'll confirm the price action on the weekly and hopefully trigger us on the quarterly to the downside. Walmart has an inside bar, and we can call that a hammer candle, but we'll look how it plays out because we do have time frame to the downside. So calls at 129.93 and puts at 128.28. Now, if we trend down, we've already gone 2 down on the month. That's this candle here through that blue line. And we'll also be looking to go 2 down on the week, which is this pink line. So if we go 2 down on the day, we have a continuation on the month. Our first target is the trigger for the weekly. And then if we go to the weekly and look for our first target on the weekly, we are all the way down here for the week on Walmart at 126.61 for the week. So if we go back to the day, trigger the day, trigger the week, and there's the target for the week, okay, as well as a continuation on the month. That's on Walmart. Hopefully that makes sense to you guys. XEL has a shooter candle inside bar, so 2 actionable signals, shooter candle and an inside bar, so we can look for puts at 59.90. If we trend down, these all shift to red, and our first target is at 59.68. XLU has an inside bar shooter candle, so again, puts at 63.78, calls at 64.83. We can mark the first target out there, and we are already 2 down on the quarterly on XLU. That's a utility ETF. Alibaba has a 2 down, finish red, but it is a hammer candle. So we can look for calls at 79.77. First targets fill the gap at $80.76. And guys, listen, if we gap on any of these plays in the morning, go check out the gap video tonight so you know what you're supposed to do if we have a big gap day tomorrow, and you know how to get into plays off of the 15-minute chart. Okay, CVS has an inside bar shooter candle. We are already 2 down on the quarterly. We are approaching the bottom of a broadening formation. So we can look for puts at 87.21 and calls at 89.96 on CVS. LUV has an inside bar shooter candle, so 2 actionable signals in one. We can look for calls at 32.29. They're probable or possible with targets marked out, or puts are the more probable or the higher probability play with puts at 31.63 and first targets marked out at 31.42 on LUV. And that is the watch list, guys. If you found the information helpful, please give me a thumbs up and subscribe. And make sure you're checking at the end of the video. The top right-hand corner will have our SPY series or a SPY video for you guys. And then the bottom right has a playlist of learning tools to help you guys become more confident in your trading. So check that out. Good luck trading on Tuesday, guys, and we will see you all in the next one. Bye-bye.